Hello, everybody. Welcome to the program for June 23rd, 2023, episode number 76 of the weekly update. Thank you again for joining us and utilizing a full 30 minutes of your week, or at least the end of the week for most of you. We're just about to end the June theme of entities and partnerships, but July is tax planning and investments. We have a killer lineup set up for you. Many speakers. It's going to be great. Amy Wall is going to kick it off. Actually, AJ kicks it off with tax planning for the moderate income client. And if you have friends, that's a no charge to the entire tax industry. But then after that, of course, it's members only. And Amy has a new 8-hour program on taxation of investments, which should be pretty killer. A couple of new speakers joining us, including Michael Tullio, who just spoke at CSCA, and Mike Garrison, and Eve Davis. So it's going to be a jam-packed month, a lot of pass-through entity tax education, but a great month if you can join us. If you need ongoing support for your small practice or your large practice, but if you're a person who doesn't have another practitioner working with you and you need the input and the assistance, by all means, take a look at our tax practice support program. It meets year-round. 90 minutes of coaching on Wednesday, actually on Fridays, an additional 2 hours on Wednesday evenings during tax season. Answer every question you can imagine, from staffing, tax prep, office location, computers, tax software. So by all means, it's a great program, and we do have a few seats left in this cohort. I did ask to confirm what Frank is teaching at the Nationwide Tax Forums. He didn't get back to me. They had tax court this week in New York. As soon as I know, I'm going to add it. I can tell you, though, that Commissioner Werfel is going to deliver the keynote address at the Atlanta Forum. So if you were up in the air, Atlanta, D.C., or Orlando, you might want to go or avoid Atlanta, depending on your feelings. Coming up in the Agostino Tax Controversy series, the Federal Rules of Evidence Part 1 is July 11th, 6 p.m. to 9 p.m. I will be there live, but we will be broadcasting this, of course, via Big Marker, and it will be available on demand a few days after that. So by all means, please consider joining us for this. It's free. Frank gives this to the industry. CLE, CPE, IRS CE credits, available to everyone. New this year, I've wanted to do a mid-year update for a couple of years, and everything has kind of come together that we're actually offering one. Again, members product, but AJ Reynolds is going to put together a mid-year program. Always funny with AJ. I said, this is going to be 50 minutes or 100 minutes. And he says, how much do I got? And, he's like that law about the size, the pet grows to the size of the terrarium. So we gave AJ 100 minutes, and I'm sure he's got it full already. We added this year, for those of you that need this, an annual federal tax refresher program, the eligibility for the AFSP. So the required 6-hour program has been approved by the IRS, and that will be available definitely on demand and live. Nicole's going to teach it all 6 hours. And then we are toying with the possibility of it being live in New York City. I will let you know how that part works out. But watch for this, around August 1st, we should be releasing it, possibly releasing the material as well as the dates. I will be speaking live at Latino Tax Fest. The fest is July 10th to the 13th. I think I speak on the 13th. But if you're going to be in Las Vegas, if you're already in Las Vegas, it'd be great to see you all. If you're in Las Vegas and if there's enough subscribers there, we'll put together a quick event and do our own networking. So let me know if you're going to be in Vegas that week. I know the tax court class is in town, so we might have the possibility of getting a whole bunch of subscribers together again at one time. And that's always, for me, fabulous to meet all of you. Those of you I don't know in person, to meet you in person. All right, so we have updated numbers from our friends at the IRS, and this is as of June 10th. So, of course, numbers are coming slower. It's anywhere between a 10 and a 13-day delay. So for us, that amounts to a 2-week delay in the numbers. 3.5 million unprocessed individual returns, down to 300,000 returns. 1.7 million are in error correction, and that did not change. 1.8 million paper returns. That's where the $300,000 return difference came from. So I'm asking, what does that mean? Coincidentally, the National Taxpayer Advocate had her mid-year report out, and she was talking about their need to clean up the paper and straighten up the paper and get caught up. So I just wonder if that's reactionary by IRS management, which would be sad if that's their thing, right? Is that, they're going to talk badly about this area, we should pay attention to it this week. Form 1040X dropped to 1.42 million unprocessed as of June 10th. That's a drop of 70,000 over last week. Form 941 processing 650 million returns as of June 14th. That dropped 750,000 returns in a week. And then, by the way, that's 650,000, not 650 million. So that's a typo right there. Please, that couldn't possibly be. So right there, that's that number that I just circled is 642,000, not 640. I'm sorry, up here on the 940. For those days, guys. Yeah, so the number here, this million, it's not million, it's 650,000 as of June 14th, down 750,000 in just 1 week. So does that mean they're just banging them out? Usually at this point, they start getting early second quarter returns that aren't due till July 31st, and the number starts to go up. So I wonder if there's some sort of boom, 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 bang it out and move mandate. Not sure. Haven't seen anything. I'm just reading you the numbers. Now, 941X, 642,000 as of June 14th. That's down 105,000 in 6 days. Some of these service centers report differently than the main national numbers that are at the top of the page. So I checked the date, 6 days. What does that mean? During tax season, they were only processing 20,000 of these a week. Commissioner Werfel promised to increase it to 40,000. And instead, he's been doing significantly more than that. And remember, these mills are still running full force. We went up to almost 1 million returns at December 31st. So are they focusing on this so they can get them done? I don't know. There's still almost another year to file on 2020 returns. So there's going to be a lot more of this going on and a lot more auditing going on. ITIN announced they're processing the April submissions as of May 30th. That's pretty good. So they are current. They are doing the numbers within a month. So that's very current. For those of you that do partnerships, this is pretty concerning. I missed this previously, and I just picked it up in a tax notes article. So the ABA tax section meeting was May 5th, and we usually pick up the important stuff that's in there. Adrian Mikolosik, who is the Deputy Associate Chief Counsel for Pass-Throughs and Special Industries. You can't make that up. Deputy Associate Chief. I don't know. Counsel means she's a lawyer, right? For 2023, the IRS is subdividing non-recourse liability in order to more easily identify direct restoration obligations and partner debt guarantees. So what are they looking for? If you used a previous loan as basis, they want to make sure when you pay it back, you don't count it as basis again. And we have folks who aren't required to do a balance sheet and don't. And we have folks that do a balance sheet, but they're not required to send it in and don't. Number one problem we hear with entity returns, I can't get L, M1, M2 to work. And it's like, do you have a set of reconciled double entry accounting? And I already know the answer. No. That's the problem. So they're looking to identify partner debt guarantees and debt restoration obligations. And she's quoted as saying they want to not only get better information reporting from the IRS's perspective, but also do the partners a service So they are fully aware of the obligation as the partnership might consider that the partner should have an obligation to pay. In other words, we don't want you cheating anymore. Now, they weren't due to send us a draft return until this fall, but it's out. So here is the draft return. And as you can see, a couple of quick things that I've highlighted, right? If there's a decrease above on the capital percentage, on the capital loss or income sharing percentages, they want to know if it's a sale or an exchange. They've expanded the K1 section here, recourse, qualified non-recourse, qualified non-recourse, and recourse. And then, of course, at the bottom, check if any of the above liability is subject to a guarantee or other payment obligations by the partner. They are really looking to crack down on basis. And if you think about this, one difference here is this affects everybody, right? Whether you did a balance sheet or not, that information is being reported to the service, and probably on the Schedule K, those numbers are going to get reconciled. So everyone's going to have those numbers. No more worksheet. Just like we have a 7203 at the individual level, now we're starting to track this stuff at the entity level. Brave new world. So Drake sent out some interesting infographics. And of course, they want to capture your name and your address. So I looked at what they had, and there were a couple of things I thought would be interesting. Now, keep in mind, I don't know how many people answered this survey, but Drake has 70,000 tax firms as users. So they are the 800-pound gorilla in the industry in terms of number of companies using their product. So did you gain new clients who have been filing their own return online? 80% said yes. So most of the industry is getting new clients who were previously self-preparing. What was the most common reason they gave us? Said the taxes were too complex, made a mistake last year. Well, I didn't see any of those people come in. But if you look at this, that's 64% of people that were new clients who would. So, and then 80% of 64% still makes half. Half of all new clients said their taxes were either too complex or they made a mistake last year. There's plenty of work out there for us. They may not want to pay, but there's plenty of work out there for all of us coming in the door. How many returns did you prepare this year compared to last year? 50% said they did more. Ironically, I did more as well, and we had all of those married couples that we filed separately last year that filed jointly this year, and we still did more. So the IRS funding fight is going to continue on. This is going to live on forever. They ought to just fund the agency. They as part of the debt ceiling, they said to the military budget, they set at a 7% increase for the next 2 years. Why don't they just tell the IRS, we're going to give you 5% a year for the next 20 years. Figure out what to do with it. Make your plans. So June 21st, the House Appropriations Committee Subcommittee on Financial Services and General Government, can you believe this? Released their 2024 funding bill budget. $11.2 billion is going to the IRS. This is a $1.1 billion cut from the current budget, from the October 22 to September 23 budget. That's 10%. They're also rescinding $10.2 billion in funds that were previously appropriated under the Inflation Reduction Act. You'll remember $10 billion this year, $10 billion next year is no longer available. The House bill was drafted without any input from Democrats. It's a Republican-controlled House, so there you go. The bill also includes some things we might find interesting. $252 million cut to the Small Business Administration. Without more details, that may make sense because COVID is over. $170 million cut for the SEC. That doesn't seem like a good idea. $1.2 billion cut for the Treasury. Not clear if that includes the $1.1 billion IRS cut, but I don't think it does. $8.2 million cut for the FCC. Nobody gets a raise this year. Now, there's a counterpart bill already circulating in the Senate. It likely will differ because they don't have control of that House, but it's going to need to be worked out in committee. Oops. Oh, I'm pushing the wrong button. There we go. All right. So I don't know why this keeps making the news, but Senate Finance Committee Chairman Ron Wyden of Oregon is unhappy with the PGA. I don't know if he's a golfer. I don't get it. But he wants to look into the merger agreement between the PGA Tour and the Kingdom of Saudi Arabia's Public Investment Fund. Now, we mentioned last week what they intend to do is essentially all of the assets are going to end up as part of the private company, for-profit company that the kingdom is operating for golf tours. The PGA Tour itself will remain as a governing body, a rules body, and add their intellectual property and their logo to it, but that's it. So the Senate Finance Committee is going to look at a bunch of things. Whether the tour should continue to qualify as a 501c6 tax-exempt organization, information related to foreign investments in U.S. real estate that might be near military facilities. I don't know why that would matter or where that's coming up. They want to look at executive compensation for PGA Tour officials. Maybe they don't want them getting a bonus for doing this deal, for selling, if you will, a nonprofit. They're looking at potential conflicts of interest, and they want to look at the specific structure of the deal. Now, unrelated to this, Representative John Garamendi of California has introduced legislation that will prohibit sports leagues from getting tax-exempt status in the future. Now, it's very interesting. So under the in case your clients ask you rule, there's a bunch of legislation pending that affects us as tax professionals and or our business clients in a way that affects us, sadly. So the Choice Arrangement Act, House Resolution 3799, will make it easier to use tax-advantaged health reimbursement arrangements. What this is really doing is, you might recall that originally, prior to the Affordable Care Act, it was the Wild West of healthcare, right? Somebody had a health insurance policy, we reimbursed them for it on a tax-free basis. Somebody was paying for their spouse's policy, we reimbursed them on a tax-free basis. And originally, the Affordable Care Act said, no, you can't do that. Well, no more paying, right? That's called an employee payment plan, and that's taxable income. Well, very quickly, they came back and said, okay, it can't be taxable income. If they go on the exchange, as long as you are not an applicable large employer, right, the more than 50, if you're a small employer and you've got a client on the exchange or that owns a private policy, yes, you can reimburse them. Just make sure they're not double dipping, right, that they're not getting on a $500 policy, a $200 subsidy, and paying $300. If that's true, don't pay them more than $300. What this Choice Arrangement Act will do is it is expected to codify those other rules that allow the Affordable Care, plans like this outside of the Affordable Care Act. It appears to be very popular with the Republicans. Democrats have been arguing they don't want it. There's a letter that I stuck in, a policy statement that I stuck in your handouts, where the White House said this is yet another attack on the Affordable Care Act. There are two healthcare bills pending out there, and they want to reduce the burden on employers. So the Employer Reporting Improvement Act basically says, if taxpayers don't need a 1095B and a 1095C, stop sending it to them. And the employee will have the ability to ask for it if they need it. Paperwork Burden Reduction Act wants to modify the employer penalty assessments and the reporting requirements, create a 6-year statute of limitations. And basically, this is for folks who are applicable large employers, right? Most of our clients don't fall into this. I think I didn't mention it here, but it also allows for like a 90-day instead of the usual 30-day reply if they get an AOE notice that says they needed to offer and didn't. Offer insurance and didn't. I could probably do an hour on this, and I'm not going to, but the National Taxpayer Advocate released her mid-year report. It's kind of funny. I was able to find that picture online, and I was just trying to put it on the right-hand side, and the software said, ooh, look what I can do. So we did it. But this is Erin Collins, right? And she's speaking at AICPA Engage, I think last week or the week before. So in her mid-year report, big thing is she's detailing what she thinks of as the successes of the tax season that we just passed. IRS reduced the backlog on processed paper filed original returns from 13.3 million to 2.6 million at the end of the filing season. That's pretty awesome. But of course, what do? They ignored ERCs. They ignored a whole bunch of things. They ignored the phone. They ignored a whole bunch of things to get that done. But they got it done. Reduced it by 80% down to what Commissioner Reddick called at the time historic levels, right? The IRS can do further work to prioritize technology upgrades. And this is me speaking, not if you take their money away. She outlined key objectives from the Office of the Taxpayer Advocate for the following year. And these are things she's looking at. One thing, she was very happy the taxpayers could more likely get through on the phone, but it sure seems like that changed in the last couple of weeks, didn't it? We're able to get through. Now all of a sudden the famous, we're busy, please call back tomorrow. The Taxpayer Advocate also believes that their objectives include protect taxpayer rights as the IRS is implementing its new strategic plan, improve correspondence for audit processes, taxpayer anticipation, I think that's wrong, and agreement and default rates on installment agreements. We're going to talk about that in a minute. Implement systemic first-time penalty abatement, but allow substitution of reasonable cause. So first, they've said this for a while, right? They've gone back, where if they have a tool, when I call into practitioner priority service and say, hey, I think this person qualifies for first-time abatement, and they run that little tool, Taxpayer Advocate has said, why aren't we running that tool anyway, removing the penalty and issuing a letter? It'll allow you to use that technology to leverage and have a lot less time spent on making phone calls and dealing with these issues. So that's one. And then two, if you know the IRM says that a IRS employee, if you call in for about a penalty abatement, even if you have the best reasonable cause in the world, if first-time abatement is available, they must use first-time abatement. And she's suggesting that they should allow a substitution for reasonable cause. So all the time that we're going to save by doing a systemic abatement system, we're now going to spend that over here by saying, oh, no, I should have gotten reasonable cause, sir. Oh, all right. So Erin put in her 2 cents on the $80 billion that was granted under the Inflation Reduction Act. So $3.2 billion of it was originally allocated to taxpayer services, $4.8 billion for business services modernization. Debt ceiling, though, reduced the $80 billion down to $58 billion. She's continuing to advocate for adequate funding in all of these areas. They shouldn't be taking the money away. Now, she's joined the Janet Yellen team. The IRS must give taxpayers robust online accounts that are comparable to accounts provided by banks and other financial institutions. You'll remember that the Treasury Secretary has spent an awful amount of time worried about what's going on in the IRS. She has a whole lot more to worry about. But she said, I want to see by this date, this many IRS notices that can be answered online, all sorts of interesting benchmarks she's setting, you know. So they want, the advocate wants the IRS to make it possible for all taxpayers to e-file their returns. It has to limit the number of rejected electronic returns. Now, I couldn't find anything more on that, but what do they mean? They can accept the return like they do now with 8962 errors with advanced premium tax credit reconciliations, they accept the return, but then they send you a letter, right? When they reject the return, you have to fix it and resend it. I would think that that is resolved more quickly than sending in paper, but I don't know. Has to provide faster relief for victims of identity theft. We've been mentioning that 430 days average right now. It's outrageous. Outrageous how much they have, outrageous how long it takes to fix. IRS has to make it possible for taxpayers to receive and submit responses electronically. We've said that. For taxpayers who prefer to submit correspondence by mail, they must digitize it upon receipt. Well, that was her fight with Commissioner Reddick, that he should be digitizing everything, and he said, show me the money. Now, I'll tell you why I highlighted this. Mrs. Collins said that the IRS needs to replace the 60 discrete case management systems that they use that have limited ability to connect with each other in an integrated agency-wide system. I had to read that twice. They have 60 separate systems. I don't know how they function. 60. Thank goodness, after 13 years, we finalized that, tax treaty with Chile. So now we have 2 countries in South America where we have a treaty. Chile is one of them. The Senate ratified it 95-2. 13 years, first signed in 2010. All right, so here's some fun. This guy, Charles St. George Kirkland, sounds like a Ponzi scheme. Paradise Valley, Arizona, was sentenced to 9 years in prison and $1 million fine. Over 8 years, he helped people generate $50 million of bogus refunds. But wait, there's more. So he files a bunch of partnership returns showing that he lost $135 million selling solar equipment he had invested in. He then sold these losses to taxpayers through, sadly, our colleagues, through tax professionals. So these clients all amended their returns, and some of the examples are just outrageous. They all amended their returns, got back all their withholding plus interest, if applicable, tax liability of 0 on all those returns. Well, those $3,200 returns, he got a fee of 90%. I just thought to myself, Circular 230, anyone? More importantly, is that an unconscionable fee? Yeah. So 3,200 returns, $50 million loss to Treasury. Government says that he received $45 million. I would ask, everyone paid? Typically, criminals like this don't want to pay, right? After sentencing, he filed for divorce. His spouse gets 100 pieces of real estate they own together, 5 Teslas, and the 10,000 square foot home they live in. 5 Teslas. So the Supreme Court has declined to hear this case. Very interesting. We thought they would. So Monica Toth is 82 years old. She has a $2 million civil penalty for willfully failing to file an FBAR, disclosing a Swiss bank account. So this $4.2 million in the account, turns out it was left to her by her father, who fled Germany into Argentina at the beginning of World War II. She was unaware of the FBAR requirement. IRS doesn't really want to buy that anymore. And they didn't. And she's appealed it as far as she can. So to me, that means that $2 million penalty is otherwise sustained. Healthy Families Act of Senate Bill 1696 was introduced May 17th. It's currently under review in one of the subcommittees. This will require businesses, this is important, this will require businesses with 15 or more employees to accrue up to 7 paid sick days each year. Employees in businesses with 15 or fewer employees earning 7 unpaid sick days. So in other words, if you have 15 or fewer employees, it appears they get 7 sick days. If you're a larger firm, they can accrue up to 7 sick days. So very interesting here. Paid leave would cover illness, caregiving for sick family members, doctor's visits. So family medical leave, right? Basically at the federal level, but paid for by the employers. We're going to have to accrue it at 1 hour of leave for every 30 hours worked. So you're going to earn 1 1/3 hours in a full-time week. The employer can provide a higher limit if they want. Employers may require certification if you want to use more than 3 days in a row. There is an identical House bill. This is likely going to pass. Donna's asking, how is it a willful violation if she didn't know about the requirement? I don't know. There's probably more that we don't know about this case. It would be neat to find out, or if someone can write it up. I have not done a deep dive. I was just disturbed. I agree. In light of Bittner, I can't believe that that penalty is sustained. The difference here, of course, is they're saying she's willful. So willful penalties apparently are sustained, right? She's not going to be able to say that she doesn't have to pay the penalty. So I don't understand how this bill is either legal or how it's going to work. Filing Relief for Natural Disasters Act. So this came in, introduced June 6th, not voted on yet. It's under review in the Senate Committee on Finance. This is going to allow the governor of a state to extend the federal filing deadline if there's a state declared emergency. That seems to fly in the face of the Constitution. So rather than waiting for a federally declared disaster, your governor is simply going to say, pay your taxes a month later. Now, this bill is also going to automatically extend the mandatory filing extension when there's a presidentially declared disaster area from 60 days to 120 days. There's a mirrored bill in the House, same thing. It's going to probably both pass, right? There's nothing to work out. This will be interesting how they make it work. I know I mentioned this last week because I had seen it in Politico or somewhere, but I didn't know any of the details, so now we're going to put up some details. Small Business Jobs Act, the biggest thing it's doing is changing the 1099 reporting from $600 to $5,000. We'll see. This is on the 1099 NEC. Now, if you remember, the bulk of the debate we've had was 1099K, right? No one ever touched the 1099 NEC. It's been $600 for at least since 1987 when I started doing tax returns, right? So that number hasn't moved. All right, so there's some things we forgot here. So the Joint Committee on Taxation, these are the folks that work for Congress that examine different issues and give them dollar amounts, right? There's all sorts of folks between the CBO, the GAO, Congressional Budget Office, General Accounting Office, and the Joint Committee on Taxation that'll calculate numbers. They don't always come up with the same number. But there's a basic report out there, a 28-page report they created for a hearing, basically to explain the child tax credit and the earned income tax credit to people. 28 pages. It's pretty well done. It's got some good graphs. And I think a layman who's never received a credit would understand it. Now, as we know, after the Tax Cut and Job Act, generally the tax code reverts back to where it was in December 31st, 2017, right? But post 2025, they're not doing that with respect to these credits. The child tax credit after December 31st, 2025 will actually be $1,000. There'll be a phase out at $75,000 for single and head of household. That for every $1,000 of income, you lose $50 of credit. The phase out is $110,000 for a married filing joint couple. Forgot this, right? We get that 400,000, 200,000 in our head. Forgot about it. So thank you to Henry, who is on the call today. New York passes a beneficial ownership bill. Think of this as Corporate Transparency Act for New York State with a difference. Now, this has already passed the Assembly and the Senate. Our governor, when Governor Emmy Ward resigned, the lieutenant governor became the governor. She is from Hamburg, the same place as Mark Dombrowski. So I want you to read into that on what's going to happen here. But the key difference is that the New York database is publicly available, not just available for law enforcement. So is this going to encourage other states to develop their own database? I don't know. I would really hope that this is New York State's idea of leveraging federal access for local law enforcement, but I have no idea. All right, this is not an error. I want to talk about this to you. So the Internal Revenue Manual is the guide that IRS employees use to do their job. We often quote the Internal Revenue Manual in letters and when we're on the phone, simply so these folks understand what they can do and how they can do their job. Every day we must say IRM this, IRM that. So we have an interesting case out here with, in the past, when I started out as an enrolled agent, I would pick up the phone and make my call. And this is John Shealy. Here's my CAF, and onward. Some point between 30 years ago and a couple of years ago when Nicole became an enrolled agent, this changed. We were trying to figure out what year. But now when you call, as you all know, if you're a Circular 230 provider, they would like your social security number and your year of birth, date of birth, and they match that up as well as part of identity theft. Now, personally, if my identity's been compromised, they know my social security number and my date of birth, but be that as it may. So the IRM says that this is done to combat identity theft. I don't think it's necessarily a bad idea. But what do they do with that data when they collect it? That person is sitting there. I mean, if they're just typing it into the computer and the computer lights up green, that's awesome. We don't think that's what they're doing. So we'd like to know what they're doing. So if you go in and look at the cited section there, I guess I'll give you the site on the next page. And these sections are all redacted on the public-facing page. The IRS does not want you to see what's in there. Okay. Why? Well, there's a fellow by the name of Keith Fogg, and he writes as one of the writers on the Procedurally Taxing blog. Wicked smart individual. No, I thought he was the dean of Harvard. I was wrong. But he's retired director of the Harvard Low-Income Taxpayer Clinic. So he did a FOIA request looking for that missing information, and the IRS denied it. They said that they denied the FOIA request, saying that they are entitled to the exemption 7E, which is the law enforcement exemption. I don't need to give it to you because you would know our secrets, our investigative secrets, or something about our system. So no. When you disagree, you need to sue for a FOIA. Fortunately, Mr. Fogg is an attorney with 30 years experience at the chief counsel's office and his law degree. So off he went. And what's really interesting is he's represented in this case by two big law firms. So I think that's one of those, hi, I need a favor kind of things. And boom, they lined up to give him a favor. All right, so in this case of Fogg versus Internal Revenue Service, in 2022, a Minnesota judge ruled for the IRS and said, they're right, you're not entitled. He appealed this to the 8th Circuit, who looked at it and said, you know what, we're sending this back to the trial judge for an in-camera review. I'm going to get this wrong, the attorneys that are on here, but basically an in-camera review is that stuff we weren't going to let everybody look at, we're going to let the judge look at it, and the judge can make a decision, is this something that, in this case, that should be disclosed or not? Well, February 2023, this particular judge for the second time said, heck no, you're not going to look at it. The redactions protected information about the authentication process that are intended to prevent fraud in a way that fit exemption 7E. Well, good Lord, you've all been through this. They ask you for your name and your social security number, right? What possibly needs to be protected there except our social security number? So he appealed again on June 6th. And the appeals court said the lower court reading is too broad. Now he's looking for those 5 redacted paragraphs. Now, what are they doing here? I can't believe I had written that section down. I can't believe I must have deleted that slide. If anybody needs it, let me know. I will send you the IRM section. But actually, if you look in your handouts, I gave you a lot of handouts today. So in the handouts is the Joint Committee on Taxation background on individual tax credits. I thought that was a neat read. An article on beneficial ownership from Tax Notes today, the New York State law, and then a copy of this particular item is also a article from Tax Notes on Mr. Fogg and what's going on here, and the IRM section I believe is in there. So personally, I know they're writing it down because I've had more than one time where someone has said to me, I must have written your social security number down wrong. What is that again? Well, here in my office, we have shredding boxes, right? Because you can't leave pieces of paper alone. You can't throw them away. We put things into shredding. We probably overshred. IRS employees working at home, what are they doing with that paper? What are they doing with those little notes of paper? So I will not name her, but another EA on Twitter shared a story with me on Twitter that she had a situation where setting up an installment plan, the IRS agent inadvertently opened up the installment agreement in the representative's social security number. And it took her quite a while to get this resolved. One piece of humor is one agent that she spoke to in trying to get this resolved, aside from the fact that they can't understand how it happened. The one agent did comment to her, well, at least you don't owe the money. There's some good news. This is the kind of week I had, right? So I hope you all had a better week. And that's a GIF in something other than in big marker. You would see it going back and forth. And it would be even funnier than it is now, right? So anyway, you've wasted another good 45 minutes with me. If you're not a subscriber, you should please consider becoming one. We have a lot of great material. If you sign up at the $52 level, that price will never go up as long as you continue with us as a subscriber. So thank you all. I hope you have a great weekend. We will see you here next week, where I waste another perfectly good 30 minutes of your life. Thanks again.